All right. So today is actually the main day. We're introducing you to real estate business. And I know that some of us, if not all, have heard about real estate. We all do real estate. We all have one or two things to do with real estate. What is very visible and obvious as we speak is that we are all streaming, listening from a building from somewhere as we speak. And if you are not in any of such at the moment, at the end of the day, the destination will end up being in a building. So we all have one or two things to do with real estate. Right, let's get to it. This is the table of content of today's session. We talk about the background of real estate business, real estate as a business, property investment, key concepts in real estate, how to convert prospect. I know a lot of us will be very interested in that. How to generate leads, some planet real estate business focus, because real estate is big, what our focus in it, and our property niche, what type of property we focus on too. So the background of real estate. So real estate is a business of solving people's housing, commercial, investment needs, and at the same time with creating a long-term wealth. That's actually the backdrop of real estate itself. When we say that something is tagged or associated, the property is associated with real estate, or land is associated with real estate, or a space, maybe warehouse, and all is associated with real estate. What is the backdrop of that concept is the fact that it is there to create some sort of income that can be tagged as wealth. And why I believe the word wealth, is always associated with real estate is the potential, the reality of its potential to consistently generate returns year and years and many, many years to come. So it's more or less like, will I use the word everlasting now? Yeah, it's something that generates generation to generation. It's something that can be passed down. I know for some of us will have experienced our parents or parents of some people that we know, or houses that we know. Uh, I think I've experienced some sorts at the beginning of my life when, before I entered university, I was living in an apartment where there are several owners. And why that is, the father that built the house has died. So the children that shared the apartment, with each other. So you have different landlord according to how it's being shared. So that those are the inheritance passed down here and there. So it's something that has a long time wealth creation or wealth generation. That's what is called real estate. And it's one of the few industry that touches every sector of the economy because of the need to we need to have a place to live in, place to work in, place to invest, shop, manufacture, right? If you go to shopping mall, want to go and shop today, having something to do with real estate because it's going to be is the mall is going to be located or be situated in a building. So anything that has to do with building and land, it's real estate, especially with the fact that it has the concept of making income in it. Also, manufacture where all the things that we consume are being manufactured from. A lot of them are also from a place where we work from, where we live at. So this we have carved this out to show that it's an essential commodity. That's my point, bringing this out. So let's say a little bit about the statistics about um, real estate business. One thing that drives real estate as a business is population. Population is what creates the supply and demand, right? So as we speak, based on estimation, Nigeria is with about 230 million people. Lagos, being the main commercial hub and one of the Africa fastest growing cities, Thousands of people join Lagos in search of opportunity, which makes Lagos saturated. The land size of Lagos is not is less than the number of population it accommodates. And you know what that means? That creates a huge gap for demand, a huge gap between supply and demand of housing, which is accommodation. That's even the primary place for people to stay and lay their heads. You know, the growing population creates enormous demand for housing, office space, warehouses, shop centers, and industrial facilities. When you have a whole lot of people, there will definitely be a lot of industries. You know, why do you think Chinese people, China? Why do you think we have a whole lot of them in Nigeria? It's because of our population, and also other countries coming here. So where there's population in economic terms, there is huge, opportunity to be tapped into, economic opportunity to be tapped into, that brings in whole lot of income doing so. So that's why Lagos is one of the best cities in Nigeria to practice real estate as a business. Because the fact that we are many in Nigeria and especially in Lagos gives room to the demand, tremendous demand, and give room to opportunity in the real estate business. Based on that fact, it is estimated by statistic of bureau, I believe that's the name they call them. They came up and ranked real estate, if not second, last time I checked. But what best I can see, what capture my fancy is the fact that real estate is contributing 41 trillion, about 41 trillion to the country's GDP. That is something else. So, okay, what does that mean? What does that mean? How does that concern us? A country is like a family. It's like a family of people, group of people living in one under one principle, policy, to be able to better their life economically and other sorts, right? So they calculate what is the major things that a lot of the population of a country putting their money into for investment, and that's why GDP is calculated. And you can see that a lot of people, a lot of money, formally, this 41 trillion naira is even formal, not even informal sector. Formally, 41 trillion of people's money in Nigeria has gone to real estate and is still going there. So it is to tell you that there's a huge supply and there's huge demand in that sector. And that is why it must be a business for you and I. So, and what is actually interesting in this is the fact that there's housing deficit as much as 41 trillion naira has been poured into the investment in real estate. There's a huge gap in housing deficits, which creates room for those that have the insights to take advantage of that and, you know, get something out of it as business. So 3.4 million units in state, with a housing deficit estimated at about 3.4 million units in the state alone, that's Lagos State alone. Relentless population pressure. So the challenges that is causing this is the population pressure, massive infrastructure projects reshaping the eastern corridors, the opportunity are real. So there are a lot of infrastructures that are coming up. For instance, look at Dangote Refinery. Those are huge infrastructure. Domicile here in Lagos. What do you think that is? That's going to attract a lot of population, a lot of people from other states, out of the country, to be demanding for accommodation because they work there. They will need a place to stay, and so many other big, huge infrastructure that is being, established in Lagos today. So you know that this is a huge business that you and I will tap into. We are already tapping into it. We are opening your eyes to see it and see how we all can benefit from it. And so far, so good. Real estate has contributed immensely to the economy. It has a huge a huge, long ecosystem. Real estate does not exist alone. It works with a lot of professionals, and it's an opportunity through which all of them, majority of them, are getting money through employment. Right? Real estate has given room to engineer, architects, quantity surveyors, lawyers, estate surveyors, facility managers, contractors, artisans, financial institutions, manufacturers and retailers, logistic business to thrive. So these are so much businesses, professions attached to real estate apart from the investment aspect of it. So real estate as a business. So let's come down to why we are looking at all this. We are looking at real estate as a business, and one of the things that looks like a prevalent idea out there is when you mention real estate, everybody think about land, and it is not 100% correct because there are so many other things that I'm going to expose you to, which you will know, you may know before now, that people can start real estate business. It's not only by land banking, because when you hear land banking means you put your money in the land when it was cheap and wait for a few years to sell it when it becomes expensive. That's the common one that we all understand and we all know. But much more, I'm going to let us see today. So there's a business in real estate called brokerage. The informal terms for it is agent. When you hear agent is helping me to get house here and there. It's much more than that when it is well structured and packaged. We call it brokerage. So it connects buyers to seller. This is one of the best, not the best, but one of the best real estate business that one should think of. I always imagine that if only people understand the potential in brokerage, then I believe virtually everybody want to be a broker because there's a lot in it. As a matter of fact, some planets started as a broker, crude one at that, then will get refined over time and get to being where we are today. Then property development. Property development is putting in finance, creating residential and commercial property for the sake of ROI, return on investment. I'm bringing my 100 million, I'm bringing my 1 billion to a project so that when I'm done with the project, I may get investor that eventually when I'm sold out, I should be get 1.5 billion back, 1.3 billion back, or 2 billion back, thereabout. That is the focus of property development. As you see, in the first brokerage, when I mentioned it, I didn't say that you're going to bring money to get money. All you need to do is to have idea of what it means to connect buyers to seller, and you are good on commission. But the second one, you need money to start it. That's property development. Anything that has to do with property development is like a construction of property. There's money involved, and that is another way through which real estate business can be undertaken. Property management. Property management requires an expertise. You need to have been trained to be a property manager. And what does that mean? Management of assets for investors. Investors that have purchased, that have invested in one unit or the other, need someone that can help in managing them. We call them property managers. In the informal sector, they call them caretakers. I know we are all familiar with that concept of caretaker. But the real word for them is property development. And I think it's safe to say at this point that we must acquaint ourselves with all this concept because it's necessary when we are prospecting, talking to people. These are the expectations, the words that are expected, or the concepts that are expected to be used to show that you've gone through some training and you've understood how real estate works and you have the terminologies with it. Although later in the slides, there's a section that looks at the concept and terminology in real estate. Yeah, to the next one. Facility management, that is different from property management. Let me explain it. Facility management, they maintain estate and commercial buildings. So, in another word, property managers focus on focus on the return that an asset, a building, a property will generate, which means property managers are directly dealing with the tenants as to paying their rent, renew their leases, and things like that. While facility managers focus on the building maintenance, ensure that the building maintains the standard that can continually generating income. I hope that is clear. So that's the major difference. But a lot of people don't know the difference between the two. But for the sake of this session, now you know it. Facility managers are different from property managers. Land banking. This is the major common real estate business known to virtually all, but there are strategies around it for those that are taking it as business. As much as it is seen to be one of the most lucrative real estate business, it's also capital intensive and the risk is higher than the others because the chances that your land can have one or two challenges is high. There's something we call, if one is acquiring a land, this is making me to digress. If one is acquiring a land, there's something we call due diligence. I believe you know that, right? You have heard that before. Due diligence means you want to do a search on the landed property you want to buy. In fact, some lawyer, even out of oversight, do not pay attention to something we call land charting. So land charting is is going to give you an information as to whether the land you are buying is zoned under commercial, agriculture, or residential. So people don't know that what everybody wants to check, does it have C of O, does it have this and that? And many a times those other extra search can put one in good standing or mar one's investment. So those are the things that would still shed light to maybe later in the future, especially maybe when the thing starts itself. So land banking is also acquiring strategic land for future appreciation. I buy land now, I allow it to appreciate and I sell it later and make my ROI. This is not ROI, this is actually capital gain anyways. Capital gain mean I put in 100 million to buy a land and I sell it for 150 million. I make a gain of 500,000 and 500 million. That's capital gain. Yes, then the next one is short time renters. Short time renters, that's short let renters. It's a serviced and furnished apartment for short letting. Short letting is a set of apartment or building structured in a serviced manner. Means all that a guest or a tenant will need are already provided, furnished. That's another word for that is Airbnb. Airbnb is not actually a word. Airbnb is a platform through which people get to let these short let renters, short let apartment, right? But Airbnb has become a household name for short let because as Indomie has become a household name for noodles, so is Airbnb because they are the first platform that started offering their services and they came out very strong and became an international platform. So no other name to be attached to short letter if not Airbnb. Let's continue. All right. So another place or another business in real estate is what is called student housing. Student housing was the business that we started with after the brokerage business. So we started the brokerage business by helping people to rent house here and there. I think I highlighted it in my last session that eventually we were able to approach some people and got their house booked and converted to hostel, right? So you can see that my stories are adding up. So after a while, helping people to get apartments and get commission, then we gather money to now be able to rent a whole building and convert it to shortlet, to house hostel, like to hostel, student hostel. And that became a lot of, that helped us to gather a lot of cash flow. Cash flow is the ROI you get on your investment. So we invested money by acquiring that property under letting. We acquired the whole property under letting. We let it for like a year. We pay every year the whole of the unit, 4 units in that building, and we've refurbished and furnished it and to structure it and make it hostel, student hostel, and we started generating cash flow from it. So that is another business that you are learning from us here. Property investment. So our major focus for this program is investment. We have we have investment offers, properties that we want the public, the people to benefit from, right? Because I use the word benefiting from it, benefit from it because it's an investment property that we have already structured to make money for people. And apart from structuring it, we are have been positioned to help them to use that property investment to get to make money, to get cash flow. By now, I think you should be following me when I say cash flow and return on investment now. Now, investor acquire real estate primarily to generate income and build wealth. That is investor. Investor is not interested in I have a property in my village, that I go to every Christmas. And after Christmas, I load the property up, I come back to Lagos to hustle. That is not an investment. Nobody. Or I work on the mainland, where I have a house I built in Ikorodu, one bungalow here and there. All my family, I kept them there. I come to Lagos to hustle. I rent a face me and face you, on the Abra area in Lagos because it's close to my workplace. Only by weekend I go there. It is suffering, my brother and sister. Suffering. That is not a wise investment. We always orientate people on that, right? Instead of you to go and do that, get a nice house, a nice flat here in Lagos, and the money you are meant to use to go and build that house, put it in investment that gives you money forever. Because the life is too short for you to be suffering that way. I know somebody that when he works on the mainland and his house is at Ikorodu. Not when I say Ikorodu, Ikorodu has deeper parts. It's down end of the world Ikorodu. This guy will take like two types, 3 or 4 bike before after getting to Ikorodu. Take about 3 bikes there about to get to his destination. Right? So it doesn't worth it. The lifespan is not that long. So you should invest wisely. Those are the educations we are going to be giving people, by going through this session and this program itself. So the objective is to own property and to let it be profitable, right? And these are ways through which investors get returns on their investments is through rental income. We go into property investments and it's rented to users, those that need it, whether yearly renter or short-let renters. And investor gets return on investment through rental income on a monthly, daily, weekly, yearly basis. Also, there's another one we call capital appreciation. It is very key. You are conversant with these terms. Capital appreciation. Capital appreciation is talking about the amount you invested and the amount you cashed out with. I've given that example before. I invested certain amount of money, say 100 million in an investment, and the end of that investment, I cashed out 150 million. So there's something you should know. There's something called property flipping. That is the third one. Property flipping. Property flipping is what gives you that capital appreciation. Or should I use that word? Okay, let me split it into two. Property flipping gives you capital gain, while every of your real estate investment gives you capital appreciation. What is the difference between the two? This is the difference. You buy a property for 100 million naira, maybe with some planet, and that property gives you 10 million, 50 million naira back every year after it's been subjected to investment planning through our offers. And you are making your money 10 million, 50 million every single year. And at the same time, on every single year, the property that we purchased at 100 million naira is not static. The value of that property is increasing. This is an instance. There was a property we purchased in December last year, 2025, this 2026. We bought it at a certain amount of money. Let me disclose it. We bought it at 110 million. Then, as we speak, that same property is a landed property. We are building on it at the moment. That same property worth 230 million. Just in how many time? Just in a few months, 7, 8, 9 months thereabouts. 230 million. You can see the huge difference, huge gap, that has happened. So what have we gained there? Because we still hold the property, we are not selling it. We call that capital appreciation. Our property has appreciated in value, right? But if you sell it now, we bought at 110. If you sell it at 230 as we speak, that is when we say that if I remove 110 from 220, 230, I have 120. Now 120 becomes my capital gain. That's the difference between the two. That 120 becomes my capital gain. And if I do that by saying I bought it in December, I'm selling it now in August. If I sell it now in August, what I'm doing is I'm flipping. That's what we call property flipping. I'm flipping the property to make gain. So that means I've made more than 100% of my money. If I buy for 110, I'm selling at 220, 230. So I'm making 120 more. So that means I've made more than 100% of my investment. And that's money I'm making on top is called capital gain. And that comes from property flipping. I believe I'm being understood. Okay, so land banking, I've explained that before. This is another area through which returns come back to an investor. We buy land now, wait for a number of years or time. So you can see the strategy I just explained, which is not exposed to everyone. There are some land you buy strategically within a short period of time, it would appreciate if not 50, if not 100 or more percent. And there's some land you buy that forever and ever till the kingdom of God comes, maybe 10% or 20%. It will still appreciate, but it will take forever. So these are the ideas, these are the knowledge that you will have as to strategic places to invest such amount of money in buying land that gives a huge return on investment. Yeah, so that's all about land banking. Then fifth one is called real estate investment trust. Real estate investment trust is not a concept that is uh, in the public space or known to is in public space but not known 100% to everyone. So do you know that there are some people that invest in real estate like they are investing in stock? They buy real estate like they are buying stock. So they are listing, they are certified REITs listing companies that sells real estate investment like stock. It has high liquidity value. What does that mean? When I say something has high liquidity, it means that you can buy it today and sell it tomorrow. Depends on the appreciation that you have. It's like buying stock today. If stock appreciates maybe just 1% or 2%, you can decide to sell it immediately, and you can do that. So also is that concept of real estate, but that is a another level of real estate, business that brings return to investors. Then commercial leasing is having an investment or an asset in real estate and hand it over, transfer it to another person, not permanently, but for a period of time. It can be 10 years, it can be 20 years. We have some properties like that we've leased for 25 years. Some property like that we have for 20 years, for 25 years, for 24 years, leased by us, and we are using them to do short let apartments. The owner is still the owner we list from still owns the property, but the time of lease, Some Planet owns it until the time comes, maybe 20 years to this time, we hand it over to the property. So that's another way through which uh, one returns are being made in real estate business. On to the next one. The concepts that you are to be acquainted with in real estate, you have to be conversant with these things. If you don't know all these terms and you're prospecting, especially when you're prospecting, there are people they call angel investors that understand the real estate business. They will see you as amateur. They will say, as this one does not know what he's saying. It has happened to me, but I've shared it with my team before when we just started. Don't despise the little of the little beginning. The day of little beginning. I was prospecting a man to buy a property. I was asking what's the title document of this. His input document. He said, what's the title of this property? And I was looking up and down. I didn't actually know what title means. That time, still in school, like I said in my last presentation, introducing myself and Some Planet, that I started the real estate business Some Planet in my final year. So you can imagine at my final year, I'm already getting someone that wants to buy a property. I think I've left school that time, but just freshly out of school. So the person was asking that question, what's the title of the property? I couldn't really place it. So I used all the style I could to respond, but the guy got to know that this guy does not understand the question I'm asking. So that will not be your own case in this time around, especially because of a session like this. So ROI, when they say ROI, I think I've dwelled much on that based on what I've said so far. It's return on your capital, return on the investment that you put into real estate. You buy a unit with Some Planet, and Some Planet is helping you to generate money from that. Say you put some, okay, let's calculate it in this way. You buy one of our properties, say 60 million naira, and you are getting 10 million naira every year for that. So if we ask, what is your return on investment? 10 million. Then what is the percentage of your return on investment? Because return on investment is actually often calculated on percentage. It is to now say that what is the 10 million of 60 million? That's 10 million of 60 million. It means I'm getting 16% of my investment. If I buy at 60 million and I'm getting 10 million every year, that means I'm having 16% of my investments. So that's one of the things that um, um, one of the things that one uses to prospect. You can't go and meet an investor and you don't know what to tell, what is stand to benefit from the investment you pitch to them. So you must understand the concept of ROI. You can tell the person a percentage. This is the percentage of the amount of money you're expecting. You put so, you get so back, and that gives you 16%, that gives you 12%, that gives you 10%. It's considered in real estate to give at least 10%. A real estate deal is considered very good when it gives at least 10% on a yearly basis. Someone may ask that, how will I be expecting 10% on real estate? And they say it's highly lucrative. There's also other things I can put my money in. I can put my money in money markets. Put my money in treasury bill. Treasury bill, there's some treasury that gives 15%, gives 16%. Well, I think there are some, maybe fixed deposit that give about 18%, 17% thereabout. So why would I just make my money and get it stock someplace in real estate and get 10%? So the advantage a real estate has over them, I don't want you to know this because it's very key. I'm still going to get there, but I just want to share it here now. The advantage that this has, even though it's 10% today, it's not going to be 10% tomorrow. It changes our demand as demand, increases, right? That means your ROI, cash flow you get changes as demand increases. So that 10% today can be 20% tomorrow, can be 30% next tomorrow. For instance, we all know that there's a certain amount of money you rent a house last year or last 2 years. Is it the same amount today now? No. But the fixed deposit rates of last year, is it the same thing today? In fact, they even reduce it sometimes. The treasury bill of last whatever it is still almost the same thing, or they reduce it sometimes. It's in very slim cases you see them increasing here and there. So that's an advantage that let's say gives you. That is number one. Number two advantage is capital appreciation. I believe you understand that now. Capital appreciation is that my entry capital investment, the 60 million that is giving me 10 million, that 10 million will see increase later. That 60 million too is not static. It's gaining momentum, it's appreciating year in, year out. Unlike if I put that 60 million in fixed deposit, the 60 million remains static forever. If you leave it for 20 years, the 60 million now will not add 1 naira. The only thing you get from that money is your interest. Maybe 10%, 15%, 20% they promise you. That's what they pay you. So you can see a clear, huge difference and advantage that real estate has over other investment that you may think of. Then another thing we can talk about is something that can compete a little bit with it is what we call is maybe stock. That's share, buying big companies shares here and there. But in as much as it looks like it can compete with it, that has a huge disadvantage. A huge disadvantage that stock has is it can crash. It can come down to zero that you can lose your money completely. But real estate cannot come down to zero. Worst case scenario with real estate, it will remain where it is. Have you seen a property that's been rented for 1,000 today, 1 million today? Tomorrow it now crash to 500,000. It's not possible. It's not. It's be possible, but it's not. It's rare. It's rare, right? Or have you seen a land that worth 1 million yesterday? Today now worth 800,000. It's rare. It will ever increase, but stock can worth 1 million naira today and crash to 200 naira tomorrow. It's possible. In fact, it can crash to 0 naira tomorrow. So those are the advantages that you will see. Although stock can also rise from 0% to 100% within few time, right? So those are the competitive nature that it has. But in the long run, posterity stake, let's still beats, that aspect of investment. That is why you see every, wealthy man or woman on earth, they must have real estate portfolio. Everyone that the biggest guys that we know, running the world, running the Forbes list today, they all have one or two to do with real estate. Go to them. They have real estate portfolio in large quantity. So we also have to think the same. So, capital appreciation, I think I've overflocked that. I've explained that time and time in my increase in the market value of your property over time. Then off plan is a concept in real estate that must be understood, especially if you are coming to us because we do more of off plan. What does off plan mean? Off plan is property sold before construction. Construction. That's an error there. Property sold before construction, often at discounted price. You understand that the property that worth a particular market value when it's completed will be sold lesser than that value because it's still under construction. So it's an advantage for whoever is being prospected or you're prospecting at that point in time to key into an off-plan package because it helps to reduce your costs of purchase of the property. Cash flow, I've logged it also before now. Cash flow is what you get from your investments. The returns you get from investment is cash flow. So one of the things that investor want to hear is we want to tell investor is this investment gives you cash flow. It's not static. It gives you the money back like Kiyosaki that I quoted last time. So what puts money in your pocket is an asset. What takes money out of your pocket is not an asset, even though it's a building, right? There are some people that build houses in the village. They are sending money for maintenance, to maintain the house. The house is not giving them 1 naira back, right? So that's I like that school of thought, right? So that is the way we look at it. So it gives money in, it's a cash flow. It doesn't give money in, it's not really it's not worthy of giving time to. So liquidity is something that you understand because an angel investor will ask you, is this investment, what's the liquidity level? You know what that means? Can I get out at any point in time and get my money back? Is it easily available to be resold and I cash out and move out? Right? But real estate generally is not like that. Real estate is a process, it takes time. Right? Let me just read what I put here. The ease of converting an asset to cash. Real estate generally has lower liquidity than stocks and cash. So stock, you can today immediately convert your stock to money, like we speak. And of course, cash in the bank, you can always withdraw it. But real estate, though you have it as an asset, but it's not something you can convert immediately. But one of the models that Sun Planet has, we are working on a model where your asset can be converted in a shortest period of time. So what does that mean? We have, I'm still going there. We have a concept called fractional real estate, where a unit of apartment is being owned by many people. So that help break the purchase price to a cost that virtually an average individual can afford. And going by what it gives you, return on investment you get, or the cash flow you get on the periodic time, anybody that want to sell, there will always be a willing buyer at any point in time, right? So that is a bit, we have solved that issue in the real estate from our own perspective, right? So, but you need to understand the concept. Then apartment type, when we say apartment type, is what's a compartment like? We have studio. A studio apartment is a room self-contained. A room self-contained is a studio apartment. And what is a room self-contained? A room self-contained is a compartment, a space that has that's what I call self-contained. It has self toilets, like personal toilets inside, not accessing outside. You have it you are the only one that can access it. You have to enter that space to access that toilet. So when you have a room that the toilet is outside, that you have to, but only you using it anyways, but you have the toilet outside, it's not a self-contained. Self-contained, it must be self-accessed. You can only access it through your apartments. That's what is called self-contained. And at the same time, also have kitchenette. Anyways, kitchenette is not compulsory to make this room self-contained. But if it is there, it makes justify the fact that it's self-contained anyways. So that is what room self-contained is all about. And one bedroom, when they say one bedroom flat, one bedroom is also called mini flat. That's mini flat means a smaller um, compartment of flat. Flat is known to be big. Flat is known to have several compartments. But when it's mini, it means that you just have only one room and one living room. It has only one room one living room with other conveniences like the toilet. The toilet must be self, right? Must be self, must be in there, and the kitchen also in it. So one bedroom does not mean one a studio. It does not mean one room self-contained. When they say one bedroom flat, there must be flat behind it. I didn't put flat here. There must be flat behind it to show that it has one room and one living room. So a lot of people actually confuse room self-contained to one bedroom. When they hear one bedroom, they think it's just one room, that they will stay. But when it's one bedroom flat, it has a living room, right? That's the concept, right? You need to be conversant with that. So we will not mislead people that we are talking to. When you say one bedroom and you are in your mind, you are referring one bedroom to a self-contained. That person can be misled. And one thing that we do not ever want to do is to, touch the integrity that has been built over the years. You want to tell them this is what it is and that is what you should get. Right. So we have one bedroom. They are flats. I put flat. That means there can be two bedroom. There are two bedroom, just like the name implies. Two rooms and a living room. Three bedroom. Three rooms and a living room. Four bedroom. Four rooms and a bed and living room. Five bedroom. Five bedroom. Five rooms and a living room. As many as possible. Right. That's what. Sorry, I'm having a bit of kataya. So that's what that is about. Then we have um, buildings called duplex. I know we know duplex, but a house is not a duplex. We know duplex is a one floor above the other building, a building that has one floor above the other. But the distinct definition is not all buildings that have one floor above the other that is duplex, right? It is the building that has one floor above the other, that the upper floor can only be accessed from the ground floor. Should I say that again? The upper floor can only be accessed from the ground floor. You can only go from the ground floor to have a staircase inbuilt inside to access the upper floor. That is duplex. If you have buildings that you can see, a one-story building that have flat up, flat down, is not a duplex. It is one-story building, right? So that is that. And duplex can be more than one floor. Duplex can take two floors. It can be ground, one floor, second floor, but all of them are linked together from the ground floor, right? So that can also be called terrace duplex. Anyways, that's the name they call that. Then there kind of building we call terrace. Terrace are buildings built attached together in a row. I don't know whether I have seen that before. There are many of them in Lekki. Twin building that look alike, like 4, 5, 6, 7, 8, 9, 10 in a row. That's what we call terrace. So it can be duplex, it can be flat. So those are the terrace. Most of times they are always duplex, right? Terrace duplex is a title that is obtained when you are purchasing a property that has C of O already. Because one property cannot have two C of Os. If they have issued C of O to anybody before and you are now buying to that property, government cannot give you C of O anymore. What they will give you is a consent from governor. Governor will consent is that yes, I'm aware that he has bought this property from the person that previously obtained the CFO. That's what they call it, governor's consent, right? Then what is that? The governor's consent comes in form of deed of assignment. So deed of assignment is an agreement between the new buyer and the the previous owner as to transferring the ownership to the new buyer, and at the same time the costs of how much it is getting the property and the property description as it is in the survey. So all the coordinates and all of the property will be imputed in that agreement. That is what the governor will now consent to say, yes, I have seen this, I'm aware of this, I'm approve of it, that this has moved from someone that has C of O to someone that now owns it now. So when you go to lands in Alausa to search for that property, you will not see the name of the person with CFO anymore. When that governor's consent is perfected, you will now see the new owner's name as the owner of that property. So that's what that is called. Then there's one they call freehold and leasehold. Mm. So freehold and leasehold is a concept that is not 100% known to a lot of people. A friend of mine bought a land somewhere. He has already bought it before he told me. He bought a land somewhere in Ikorodu again. I don't know why Ikorodu is all the example I'm giving today. He bought the land at Ikorodu and he has paid the Omonile. So it's Omonile that issued this one. Omonile has issued receipt for him. And after the receipt has been issued, they also now go to give me agreement, which is deed of assignment. So they give him that deed. Is that deed that is meant to use to get C of O because Omonile does not have C of O only before. So they gave him the deed and he gave it to me to check for him. And I discovered that they did not give him freehold, they gave him leasehold. What does that mean? Freehold from Omonile means that this land has been transferred to you. We do not have a reversionary interest. Reversionary, like we don't have anything to gain or get or to come to you for again. So we have, it's a freehold. We are freely giving it to you to hold. That's a freehold. So with that, you cannot proceed to the government and get your C of O on it. But if they give you leasehold, this hold means we've transferred it to you, but we still have what? Reversionary interest. It means on a certain period of time, you'll be giving us royalty. That's what they used to call it, royalty. Well, not something 100% significant, but it's still tied to them that you have to be renewed the royalty on a yearly or on an interval agreed in the agreement, right? So there's a way they craft the agreement, but he didn't say it because they didn't say it, they didn't discuss it with mouth. So he brought it to me and said, this thing is not freehold, oh, it's leasehold. And when it is leasehold, you can't get a C of O on it. You can't get a C of O, but you can get we call it deed of lease. You can get it when you take it to government, government can give you deed of lease. They will stamp that, okay, they are aware of the lease you are getting from this family or from this social person, right? Let me continue. I think we stopped at due diligence. Then I was talking about, okay, I think I was talking about the title document. Yes, title document. I was talking about freehold and leasehold. And I mentioned that freehold is when they have given you without reversionary interest, and leasehold is when they still have interest on the property. I think I've done justice to that. So then move to fair market value. Hmm. Fair market value is the price a willing buyer will pay a willing seller. Is the price a willing buyer will pay and a willing seller will accept under normal circumstances. Yeah, so this is, when there's a market value being capped, market value is talking about what every other person is selling in the area. But they also where we call fair market value. That is when the buyer and the seller meet. There's always a conversation as to discount here and there. And if both of them are willing, the buyer is willing, the seller is willing, then that works. And many a times, such circumstance and situation becomes market value, right? So markets actually reconsidered and readjusted by that conversation many a times. I remember when we're doing brokerage that time, business, more of brokerage business that time. What we normally do, especially when it comes to sales, after we've done everything we need to do to prospect and we see seriousness in the prospect, we try to let both the buyer and the seller meet. So what we do by that uh, is to conduct a meeting where both parties and ourselves would meet, ourselves as umpire of the the conversation, and both have the conversation. So we allow the flow of both of them to say, oh, well, can you give me this? Can you give me that? And if they agree, it's fine by us. So we will not be the one that will determine 100% what the seller is willing to stay to sell. Or many a times, there's always an instruction from the seller. It's either this or nothing. So you don't bring anyone for me if it's not ready to pay a certain amount of money I want to buy, right? So that's about the fair market value. Then due diligence. I think I've mentioned it before. Due diligence is to search the thorough investigation of a property's legal, physical, and financial status. I don't know why this thing is not it's not coming to the down. It's okay. Okay, so let me just continue. Um, so due diligence is to search the property. Like I was saying, there's a lot to look into when you're doing due diligence for a property beyond C of O. We all know that C of O, whatever, is what we always look at. There's always the financial commitment that a lawyer or the whoever that is doing the acting on behalf of the buyer to look into, which is to check the financial status of the house to see if that property, land, or a house has been used for mortgage that have not been completely paid off or have been used for loan. Like bank can give you money and use house as collateral. So there are many houses that will have been used as collateral, and if one buys into that, you are the one that will pay the collateral back because bank will come after you or they seize the property from you. So those search are important that lawyer or the person acting on behalf of the buyer gets to do that. So how we do things like this when we're still doing brokerage is to allow or advise the buyer to bring in his representative like a lawyer, though that always have issue in stalling the transaction, but it is better because the third party, will be saved eventually, because if you facilitate that transaction and eventually something happens, it comes back to the brokerage firm too, as to selling things that is not clear or that is not sellable, right? So if they have brought their lawyer or their expert and the expert has cleared it, it means that even the brokerage firm is also clear of any allegation in the future because he has had the privilege of doing his due diligence from his own end, not depending on what the brokerage firm is telling him or her, right? So that's how it works. And at the same time, there's something we call land charting, right? Especially if the land does not have um, C of O. Land charting, like I think I mentioned it before, but another thing, I don't know whether it's land charting they call it. This will tell you, I think land charting too, yes, or land information. This will tell you if the property is under acquisition or is not under acquisition. What does that mean? Every property, every land belongs to, let me use the word land. Every property or landed property belongs to the government. I hope you know, right? Then, if then there are some lands that government has ceded to families called monile, right? Or to individuals or to group of people or to or to companies ceded to them through ratification, right? So, and there are some lands that government did not give to anyone that belongs to the government. It might be bush, but belongs to the government. So, how to know which land belongs to the government or which land does not belong to the government is land charting. So, that land charting will tell you that this property or this land is under acquisition. If you hear it's under acquisition, please run. Don't be part of that transaction because whether the buyer knows it or not, now or in the future, is going to blame himself for purchasing that property because government will come, demolish whatever that is on it or dispossess the person, however. Right. So that is on the acquisition. Then When you chart a land and you hear non-acquisition, it's under non-acquisition, it means that the land is free from government acquisition. They can now proceed and buy from whoever the government has allocated the land for, right? Then also on the acquisition I mentioned earlier before, it has two types. Acquisition has two types. Like I said before, that when you hear acquisition, you should run. But let me now tell you that acquisition has two types. There's a land that will fall under acquisition that will be described as non-committed acquisition. And there's another one that will fall under acquisition that could be described as committed acquisition. So non-committed acquisition means government has that land, they own it, but they don't have plan for it now or in the future. So they are open to sell it to individual or whoever that is interested in buying it, right? So those non-committed acquisition can still be acquired. And when you are acquiring it, you will now need to go to government. You are going to buy it from government. And that process is called ratification. You go to government to ratify the land. The government will give or allocate the land to you and give you document in that regards. I hope that is clear. Then, if it is committed acquisition, please run away, patapata. Do not even try to say anything. So run away from that. That means government owns that land and they have plan for it. It may not be now, but in the future, they have plan for it. I hope that is understood. Yes. So that's where you see Omonile. It is land that is not allocated to anyone, whether it is not committed or committed. You see Omonile because land is there, it's bushy. Nobody is in the government until they have time. They will just leave it there. So Omonile will acquire or will possess, no acquire, will possess such land and establish the tentacles there and begin to sell to people. And people that they are selling to, if they are the type that don't do due diligence, they will buy into it. It is later when they see government, they will now know that what they have bought is not what they expected. But if they are lucky enough, if government comes or if eventually they went to search it and it is under non-committed acquisition, they only buy it back again from government. After they have bought it from Monile, they have to buy from government again. Right? That's the saving grace that they may have if it is under non-committed acquisition. But if it is under committed acquisition, no matter the millions they have given Omonile, it is gone. No matter the structure they have built on the land, it is gone because they will demolish it now or in the future. So you now know reasons why governments are demolishing houses. Two reasons. Number one, if the land is under committed or not committed acquisition. Like I say, not committed acquisition, you can buy back. But if you don't buy back from government and they have issued you warnings that this land belongs to government and you refuse to attend to it or ratify it, they can demolish your house and dispossess you of the land. And if it is now under committed, they will not even need to write it out to you. Any day they write, they have time. They will come there and demolish your house. And some of those land that are committed acquisition are lands that are close to canal. Government in the physical planning, in town planning, masterpiece they have a huge distance they give to all those canal, right? That's serving the public interest. So they have those distances given, but some developer, some Omonile will go ahead and encroach on it, buy and sell it to people or sell it to developer. Developer will build on it and sell it to people. Before you know, government will now wake up one day, like the Commissioner of Environment is doing at the moment, Honorable Wahab, that is going everywhere to demolish houses that are being built in such cases. So if something like that happens, if they go and search that land, is under committed. government will never even make it not committed. It's committed. So they can come there and break your house at any point in time. Now you know the reason why they are breaking houses. Then another reason that they can break houses or houses being broken down is if the house does not have approval planning. Like I mentioned before you lay a block, you must possess approval planning from government. And the reason behind that is they will supervise what you are building to be sure that it is fit for habitation because it's human beings that will stay there. And the responsibility of government is to protect the life and property of human beings, of the people they govern. So they have the responsibility to ensure that what you are building is in accordance with their policy and their standard. So that's the essence of the approval. So if you now get the approval and you went ahead and build, they have the power to come and demolish. Anyways, solution to that is if you have some level of influence, right, you can now do what is called as built approval. You can now begin to start the process of approval after you have built. That's why we call it as built approval. So as built approval will cost you a lot of money, but eventually you will get an approval certificate, which is better for you. So that means now or in the future, nobody can come and demolish your house. But if you don't do that and you don't have approval and you don't have people that you can influence to wait for you to process your as built approval, they can come there today if they discover that and demolish your house. Now, another reason why they will demolish house is when government come to your property and discover that the property is not fit for habitation. Maybe the property is bending, the property is cracking, there are some traces of defect, instability that the property and distress that the property is already showing. They have the right to come and pull it down. I think they will first give you the opportunity to pull it down yourself. But I bet you nobody want to demolish the house. So eventually government will come and demolish the house, you know, on behalf of the person. And but the land still being owned by the owner of the property and the land. But in a case where the house collapsed by itself, whether during construction or after construction, government will seize the land. I think this is clear. Government will seize the land from you. It will take, and you are also going to be jailed. The owner of the property, if it's been caught, is going to be jailed because they will have expected that you should have approval to show that your house is fit for habitable, or you should have what is called you should know that your property is fit for habitation, meaning that there are no cracks, there's no sign of distress, there's no sign of instability in the property. I think that is clear. So that is due diligence, and it's taking all my time. I have little time to go. Let me just run. And this is actually very key. This slide I am is very key. This is when it becomes interesting how to convert a prospect, how to pitch to people, and they will be interested in what offer you are giving them. I hope you know that it's not because the offer you are giving to them is good that will make them to consider it. You need to pitch. Pitch means you need to come up with an arranged presentation that can make the person see what he cannot see by himself. To be able to know that yes, this offer not only that is good, but it's good for me. So that is the point. That's the way you can have someone converted. Not that the offer is good alone, but that is good for me. As you are telling me, I can see that yes, I'm convinced to say that this is good for me, right? So then that will require that you understand the cash flow that the offers brings. That means what the person will tend to get by subscribing to that offer. And like I said, you also have the knowledge about why that offer is the best at the moment you are presenting it. But there are other competitive offers, like I was mentioning before. I was talking about stock, I was talking about Bitcoin. Those are other competitive. I was talking about fixed deposits and all. You should be able to tell the advantages that your offer has over other options that are available in the market, right? And if the person will not be interested in cash flow, meaning money comes to you every month, every year, and you just continue making cash, making it a passive income somewhere, the person may be interested in, what about I want my money back with interest in few years? That's what you uh, property flipping comes in. For property flipping, you look at, when you're saying flipping means that the person can, like I was saying, now you can buy the land now and sell the land later. You can buy the property now and sell the property later. Look at that off-plan scenario I painted before. If I perceive that the prospect I'm talking to will be interested more in putting the money in and get it out, cash out with interest, I will not say much about cash flow. I will say more about flipping, about capital gain. So I can go from the direction of, imagine buying it now at 140 and the main market value is 200 million. So that means within a year or year, 6 months, you have gained about 60 million, which is 40% of your capital. And if what you are saying is true and it's convincing, nobody will have that money and will not want to give it. So that is if you've perceived that that aspect is what the investor would definitely want to tend towards. Then you also begin to talk about the capital appreciation, right? Over time, how much uh, growth can be recorded on the investment capital that is being brought in. You need to understand that, like it is seen, to be frank, averagely, minimum of 5% to 10 will be added to your capital virtually on a yearly basis. This has been proven over the time. There is this concept of offers that we have, it's called leasehold, where we sell apartment to people not outrightly but on a leasehold basis. An advantage of that over buying it outrightly is the fact that you break even very, very quickly in a short period of time, and you have many years for profit making venture. So what I want to bring out from that is the price as at 2019 when we started constructing, we're selling a unit of a studio apartment for lease for around 1 million, 1 million to 1.5 million, 1 million to 1.5 in 2019. In 2020 or 2021, that moved to 3.5 million. We started selling at 3.5 million. So you can see that it's not staying at 1.5 million or 1 million. If you look at that jump, right, it's more than 100%. So if it's 1.5 in 2019 and 2020. Then in 2021, we didn't sell. That's why I couldn't put that one. But in 2020, then in 2021, we started selling, sorry, and we're selling at 3.5 million. Then in 2022, we're still selling at 3.5 million. But when it gets to 2025, 2024, we started selling at 5 million. So you can see the growth. That's what we call capital growth. The capital is appreciating, as the year goes by. So that is the way it is, and you need to know that concept and understand it clearly to know how to pitch it to a prospect that your capital grow, and give example of the one that you have seen grown before, right? So these are the ways to, as I'm talking to, I'm sure you have been convinced if I'm giving you figures as to why you should invest in an offer that has all these credentials and potentials. Now, so, and there are some other people that you're prospecting that is not interested in your cash flow, they're not interested in flipping, They just want a place they can buy and live in by themselves. They want to live in that property, right? And I count them to be very smart. Those category of investor, I count them to be very smart because it is better to buy a place that you want to live in a prime area. I'm not talking about in remote area, in a prime area. And the reason is because the amount of money that will be coming out of your pocket on a yearly basis to sustain your rental, to sustain your rent on a yearly basis is in living in eyebrow area in Lagos is very high and it increases. Now, at the moment now, three-bedroom flat, two-bedroom flat, thereabout start with a minimum of 10 million per annum in the likes of Yaba, Alagomeji, new houses. 10 million per annum. This money, this price wasn't like that before. Three-bedroom flat used to be 2.5, 3 million, 2.5, even 3 million is high, 2 million, 2.5. But now it's 10 million. Brand new house, right? So if the person has purchased the house, that would have saved you. That headache would have saved you from those headaches. And at the same time, the other why I call them smart also is that the fact of not dealing with some individual landlord shenanigans. Landlord can be very proud in Lagos. If they own a house, you are their subject. You don't. They will treat you less than. They want you to see that you are under them and things like that. And a whole lot of things are not necessary will just be coming up in the house. So these are the advantages they have. These are the things I'll be telling somebody that's looking towards that direction, right? And most importantly, what I'll be telling him is even the gain that is still going to happen. And what is the gain? Capital appreciation. Do you know that when you are living in a property that you invested in, you bought with a huge amount of money, apart from the benefit of the fact that the money you pay on rent stops, the ridiculous attitude of landlord, you don't have to witness it. You are also making money, though passive and invincible. What is that money? Capital appreciation. That property you buy, you are living in, is appreciating, is growing. The more you live there, the more it grows. So you're not losing money, you are making money, as a matter of fact. So I will tell you that your rental, the rent you're meant to be paying for a house becomes your cash flow on a yearly basis. And your living in that house, being the fact that you bought it outrightly, makes it that you are having capital appreciation every single moment you spend in that house, that you are enjoying the house is paying you, right? These are the things that need to be understood when talking to a prospect. So we give you comfort, we give you class, and things like that. Then off-plan advantage. I think I overflocked that. You can't overemphasize this. This must be always be put in the face and the mind of people when you are prospecting them for an investment that is still at off-plan. Especially, do you know the comfort you have when you are pushing off-plan to people? The comfort you have is that you must be sure that you are working with a developer that has integrity and that has delivered before on their promises. Uh-huh. In that regard, you can go and sleep and tell every story you want to tell to the prospect, because you also must be sure that you are confident of what you're selling and you're confident of people that are promising it. An example is what happened. They dragged one real estate company. This guy is there's a guy called Scott Iguma or something on the Instagram that dragged P1 Real Estate. Sorry to mention the name, but they dragged that real estate company because real estate company has a very strategy of recruiting people that can bring their family and friends to purchase their land. But the challenge will now be that eventually those people will not get the allocation of the land they purchased. Then the family people will now begin to see their cousins, their brothers, sisters that convinced them to buy to the land as if they connive together with the company. So you don't want to get a bad name. So you have to ensure that when you are talking about off plan, It must be with a reputable organization, developer that can deliver. And that is what we sell at Sun Planet. That integrity is what we sell. Most of our property, none of them has even completed a year before we complete them. Have- We always deliver before the time frame that is being given. So it means that you have the comfort that you want. So at the same time, when you are pitching to somebody, you need to have visuals, visual graphic visuals, videos, brochures, flyers, something that can convince somebody. You don't bombard, but you put maybe according to the request. Can I see how the place looks like? You send a video. No, you send a 3D. How it's going to look like. Oh, this is nice. Okay, okay. Can I know more information about it? You send a brochure that have a breakdown of every single thing they need to know, apart from what you have discussed with them. Everything you have said is in that brochure. You now say, okay, can I see the current state of the house now? You send a video showing you the construction, where it is, how people are working at the site. So you take that process like that, all those processes, convinces, it means that you are battle ready, you are prepared for prospecting that client to take a decision. Then comparative analysis, I've mentioned that before. Compare the offer to other offers in available at that moment and tell why this is better than others, because whether you are saying that or not, the person knows that there are also other offers elsewhere. So what makes yours better, you must be able to tell. And that's what I've said previously. And at the same time, when you're talking about developers, in this our field and this our locality, some planet has a name. We've built a name to ourselves, and we do something different than what others are doing. Our properties are always different from what others are doing. In fact, we have developers that come to us to get some idea here and there as to how to better structure and properly put their properties together, right? So I think with that, we have an edge in all of that. Then, when you're talking to somebody, they want to know about the security and sustainability of the what you are pitching to them, of the offer, and that's when you begin to talk about the insurance, that the property is insured, and that is true. We insure our property from construction and post-construction, right? So if anything happens, we are in a way covered, that insurance will have us covered too. And the occupancy rate, because we do not only give people offer, we manage their portfolio, we manage their investments. We have management team in place, and we have facility management team in place, which makes it easy. It means that the property will remain relevant, because facility managers will ensure that the properties are well maintained, is presentable. If there's a flower that is being planted on the property from day one when the property was launched, that flower would be would be watered, would be there will be a certainty that that flower will remain in the property as long as the property stands, or replaced at the right time when needed. Right? I'm just using that as an example to tell you how meticulous it could be to pay attention to facility management arms of our business. So we give that assurance to them. Occupancy rate, and that increases occupancy rates when property is looking new, neat all the time. People want to always take it, right? So, and then at the same time, what also increases occupancy rate is the fact that we have network. We have huge network. We are in virtually all platforms that guest visits, like Airbnb, bookings.com, on Instagram, on whatever it is we could think of, that you can get someone to rent an apartment or take a short let. Then portfolio management. So these are the comfort you give to people. You tell them what the capacity of the company handling the project can do. The portfolio management means that we have an arms that manage, that's property management. We call them portfolio management department. They manage the investment to ensure that the investment is getting the best and investors are getting their returns. And we not only we don't manage this manually, we manage this with tech, which means we have a web app that's been built that every investor will log in and see the performance of their investments, day in, day out, month in, month out. So those are the strategies that we have. Those are the things you need to know to get someone on board. Then our integrity, which I've mentioned before, we've accomplished a lot of properties. We have years of online presence. If you check our Instagram, I told you that we incorporated Sunplan in 2018. If you check our Instagram, they've not taken our Instagram down before. Instagram pages always get that problem of being taken down by Facebook, by Meta, and all. Our Instagram has been existing since 2018. And I will tell you, it's a comfort. It's something that you can tell to someone, and they will like, okay, yes, I think for you to have been there for 2018 on Instagram and you are still there, that means nobody has reported you that you have duped them. Nobody has have any issue with you, because it is easy for them to take it down immediately when I have 2 or 3 people reporting you to have mismanaged their funds or do something wrong to them. But our Instagram page has been in 2018. You go and check our first post on Instagram is 2018, right? So that to say that we've been there, right, for a very long time and we're delivering by God's grace. So also with our delivery timeline has also been, something that we pride in, and has also been the reason why we believe that our integrity speaks for us. And also, of course, the company, limited liability company, fully registered with CAC and abide with all policies and compliances that is necessary, be it tax, whatever it is that's required of the company, we do that. Then, of course, we get approval for all our projects. The approval is what I mentioned before, and at the same time, we ensure that our title documents are also in place for all our properties, because someone you are prospecting to needs to know all these things. It further gives comfort and helping them to make decision at the right time. Then, after you have done all this, you don't leave it there. You have to come to call to action. So, what next? How do you want to pay? So there are now still other benefits or interesting strategies to make payments easy for the prospect. When you have perceived, but you don't throw this open first until you perceived that, oh, maybe the person does not have the money based on the expenses you are getting. That will be the right time to say, okay, we can give you a payment plan. We can give you a payment plan. At least we've been giving payment plan for about 6 months, 3 months, thereabout, depends on the need of the person, the prospect coming, right? And at the same time, we are open to mortgage option. What does that mean? Does the person say, well, I have a bank that want to sponsor? Then opportunistic strategy is to come from the angle of, this property that I told you about, the price is about to change, and that is actually true. Prices of projects is not static. Like I said, the off-plan project increases as the project improves. So if I prospected someone to say 140 million buy now, and the person is stalling, is not performing on time, of course, going back to the person and say, this price by next week, by next 2 weeks may change, because there's a lot of milestones that have been achieved from the construction. Can they key into it now? So those opportunistic strategy, making it look like an opportunity for them that they want to lose. That's the meaning of opportunistic strategy, so that they can, immediately key into it. Or you can also say that, the units that you prefer, that you have chosen, someone else is also interested in it. That kind of conversation. I believe this is also clear. To the next one, how to generate leads. This is interesting, and there's also going to be some further elaboration on this later, but based on this session, how to generate leads is also our 4 steps. Number 1 is immediate network. What are the immediate your immediate data available to you? Who are the people you know? Who are the people that you have their contacts? They are potentials. And what do we do with them is to ensure grouping all of them, all your contacts. Don't put them on WhatsApp group, except you know that you can do that. But I will not even advise it. then the best way is to put them on BC, because they receive anything you put on BC, they receive it as direct message, right? So they can chat you directly. On a group, a lot of people are there, but on that, they chat you directly. So group them. All your contact must be grouped, and but filter when you see some that are now showing interest, you group them differently, because the content you want to be showing is different from, the content you want to send to one is different from the other. So first of all, group all of them on the BC. As investment offers are coming, send to them. And the ones that are showing interest, send them different based on your conversation with them, right? Group them differently, I meant to say. Then also your status updates, let them, your status update must be daily. If truly real estate is about consistency, I put a quote last time. It's not about how much big D you are able to close, it's how consistent you are. That's when you can close as much deals as possible. So if you are consistent, people are seeing you to see that this is what you do, then eventually, definitely, somebody will begin to see you that, this is what my brother does now, this is what my sister does now. And before you know, you get referral here and there, and people begin to call you and want to know about the investments. Then tag identified potential on every status. Yeah, the people you've identified to be potential, always tag them on your status updates. Label interested person and follow up strategically. Anyone you've seen to be interested amongst others, group them differently and have a different approach and strategy to following them up. Step 2 is intentional networking. Intentional networking, it has to do with some places you need to go to intentionally for the sake of networking, for the sake of having their content, for the sake of talking to them about investment in a very coded and formal and informal way. If I say formal now, it's not every time you wear suit. You can wear, I believe you know what I'm talking about. Just be as relaxed as possible. Family functions, this uncle, this auntie, that it's okay somehow, somewhere, that will be interested in things like that. In fact, like I said, the offers we have is an opportunity, because it makes them money and it protects their money. So they may not hear it from anywhere. If you tell them and you're able to pitch it well, it's an opportunity for them, and they will thank you for giving them that opportunity, right? So I've seen someone that went to gym house, or she registered in iFitness gym, because iFitness gym is seen to be attracting a lot of young, smart, rich kids, guys that have something substantial, that can afford this thing, right? Excuse me. Yeah, that can afford the investment. So it's not a bad idea to be in places like that for the sake of the investment plan. Also, social gathering, like I said, family and friends, social gathering, events here and there, then family and friends functions. You that don't like to go for Owambe, I think it won't be a bad idea to begin to think about it now, right? There's seminars and workshops. Most of this will be coming from us sometimes, and you can also get most of them on the Instagram. Workshops on real estate, workshops on entrepreneur and all those things, seminars on them. They do that a lot in too many hotels, conference hall, event centers. People organize things like that, like what we are doing today now. I'm very sure you know that this is highly impactful, and this is for free. So a lot of company also do things like this in physical. This is online. They do it physical also. They organize webinar. Organize seminar, organize workshop. So it's also good to be there to meet like-minded people and network with them, right? So that also work. Then partnership. When I was typing this or writing this partnership down, something I remembered when we were still doing hostel. I told you we were doing hostel before, hostel business. One of the ways that we were getting the students that were staying in those apartments that time was We went to Unilag and met some people that are doing photocopy, printers, all those things. That students will always flock their place for one assignment, whatever it is, and the other. Especially the target audience we had then was JUPEP student, that's the diploma student. But that the one that we statistically mapped that student, they are not being given hostel in school. So we met those people that are printing and everything for them and give them offer, partner with them. If you're able to refer and bring people to us, you're going to get so cut from what they are paying. And I must tell you, it really paid off. A lot of them were practically doing this as business, right? And we had a lot of people coming from them. So such strategic partnership works for you too. If you have someone, maybe a social media person, right, that understand marketing on social media, that you may not have so much of experience, you can partner with such, right? To, as you are getting the offer from some planet to send, it pushes it there, do run advert on it. Before you know, you guys are getting people that are taking it, and everything works for everyone. Yeah. So also, because of time, I think I need to move fast now. We have exhausted our time. Ask for referral for as many people as you have seen that have enjoyed the service we've offered. Ask for referral from them. Always prospect. Let it be you, that whoever you meet, you want to talk to them about investment. Then you leverage social media. This cannot be overemphasized. Then last but not the least is personal branding. Your presentation matters a lot. Your professional dressing, you have to dress professionally. You have to create content, for knowledgeable content for public consumption. Like even this webinar that we are having is something that you can screen record and just say some one or two things about it on your status, people to know that you can share, or something that you learn, or you're able to pick from here, can put in your status, something like that. It's help people to follow you and to understand that you have something to offer, not only for them to come and buy, invest only. Respond to inquiry quickly and politely. This is the best way to actually be in business. You need to always be available to respond to inquiries. I always feel so bad if someone uses money to advertise, did everything, and after you have advertised, spent money, spent your energy, your initiatives, and someone is now saying, hello, how much is it? It's not taking you forever to respond. I always believe that such a person should not be in business, should be flogged, right? So that is one thing that must be very, very much paid attention to. Supplements, our focus, there are a lot of businesses I've mentioned to you today, but what we focus on that is peculiar to our offers and services is property development, that's construction of properties, the agency and consultancy. So we also have marketing department, sales department that help push the property we build to those that can buy, to those that can invest, right? Under which umbrella you have this program, right? Then facility management are those that will ensure that the property we have built are kept in good shape so that it can continuously generate returns for us. Then investment portfolio management. We also focus on that property management aspect of things so that we can be able to manage our income and our expenses so that the investors can get the best of their investments. Then also our property niche, the kind of property that we want to build and that we are building. I think this is the last one. We have residential property. We've built a lot of this already. Focuses on service apartment, short-let apartment, family living structures, estates, and all. We built a lot of this already, and we are moving on to estates very soon. Then commercial property, industrial structures such as warehouses, stores, malls, office complexes, co-working spaces, seminar hall, resource centers. These are the targets of the kind of properties that Sun Planet is still going to be building now or in the future going forward. Then the last one, this one I'm more interested in, this one, recreational property anyways. So recreational properties are, recreational centers such as cinema, creating a property for cinema, building a property for parks, like garden parks, or for water parks. Who know about one water park that's been built at Shango Tedo? I really love that guy's concept there. Then beach houses, where people can get leisures here and there, resort houses, game houses, and many things like that. In fact, I was thinking of party house when I was putting this together. I was saying, I don't think we want to do that. But if there's an investment I show from there, we would also pay attention to that. Yeah, I think on this note, we've done so much well on this session. Then coming up next is our strategic model adoption. You see the strategy that Sun Planet has adopted. Though I've said a lot about it, but we'll now be specific about it in the next session. See you on the next session. And thank you so very much for being on this session with me and the team. Thank you.